Good evening, good morning. Uh, how have all of you been? Thank you so much, panelists, for joining this session. Very excited to hear your stories, hear what you're building and how you're solving for the farmers in each of farmers and agri input retailers in the context of Mukul in each of your markets. Super excited to get started. Jebu, should we start? I think let us get started as people will slowly trickle in. So welcome everyone for joining. We are looking forward to hearing from our entrepreneurs who are essentially B2B marketplaces trying to solve for uh, products and services and access to products and services in each of their markets. I'll start with quick introductions of each of them, starting with Valentina. Valentina is the co-founder of Workor. Uh, Workor is an agtech platform serving small and medium-sized farmers in Mexico. The company aims to digitize three main verticals of agri supply chain: input, supply and procurement, input financing, and crop off-taking. In order to capture data that can be used to underwrite credit products for the underserved segments. Valentina has been a social entrepreneur for 7 years. She's worked in different companies offering digital products to the bottom of the pyramid. Moving on to Pawan. Pawan is the CEO and founder of Aqua Exchange. Aqua Exchange is a platform for shrimp farmers in India. They offer differentiated technology and also have a platform that sells inputs as well as offtakes outputs from the farmer. So essentially a full stack platform serving the shrimp farmers in India. Pawan has 20 years of experience across different companies such as SAP Labs, Infosys, KPMG, primarily in financial services and consulting. We have Mukul here, who's the co-founder and CEO of Agrim. Agrim is a marketplace that connects agri-input manufacturers and agri-input retailers. The platform helps agri-retailers procure inventory directly from the manufacturers, as well as they offer financial services or credit for the farmers to use to procure this inventory. Mukul is a second-time entrepreneur. He's previously worked in a large logistics unicorn in India and essentially set up one of their business verticals. And last and definitely the least, I am Ishan Mishra. I am Principal South Asia for Axion Venture Lab. I lead investments in the South Asian market. Axion Venture Lab is a seed stage investor that provides capital and extensive support to innovative fintech startups that improve the reach, quality, and affordability of financial services for the 1.8 billion people who are left out of the financial sector. Axion Venture Lab is part of Axion, a global nonprofit on a mission to create fair and inclusive economy with over 60 years of experience in microfinance and fintech and impact investing. So with the introductions out of the way, I think let's dive into a very interesting conversation, which is kind of due for us. So starting with, I think, want to understand how these our entrepreneurs are solving for access in each of their markets. Starting with Valentina, first question to you would be, how is Workor solving the challenges associated with lending to farmers in Mexico?
Thank you, Ishan. So let me explain a bit of our model. So what Workor does is to provide cashless credits for farmers, meaning that farmers do not receive money, but they receive supplies they need for their production cycle. So they receive fertilizers, agrochemicals, they can even have credit for irrigation systems. And our alternative credit score criteria led us to having more than 55% of our clients who were first time accessing the formal credit. So the underwriting process and the product is completely adapted for the agro sector in Mexico, and the farmers pay at the end of the cycle after they sell the produce. All the process for the farmer is done through our platform and completely digital. So it's the first and the fastest digital credit for farmers in Mexico. Well, explaining a bit the background of how and why this problem is so crucial. In Mexico, more than 90% of farmers do not have access to formal financing because the industry is very informal. There is no traceability, no data, no data digitized, because of course there is data, but the industry is so fragmented that it cannot be like used correctly. So more than 90% of transactions are made in cash, and that makes it extremely complicated for the traditional banking institutions to analyze their credit and to actually give the financing to farmers. So the small percentage of farmers who actually have access to formal credits, they have to go through tedious processes of banks that take up to 5 months. And it's very complicated for farmers because their cycles are tied to the dates, right? There are certain dates when they have to sow and carry the main part of their expenses. So they have to first invest a lot and receive income just in 4, 5, or 6 months. So the market just does not have a product that can serve the needs of the farmers. And all that lack of financing results in low margins, low yields year after year. So it's like a vicious circle that farmers are stuck in. And the situation is that the more than 70% of farmers in Mexico live below the poverty line. However, Mexican farmers play a crucial role in the world supply chain. So Vercor, with the financing that we offer, we empower farmers and they can actually purchase high quality agri supplies, improve the quality of their produce, sell it more expensive, and like this increase the incomes year after year. So that is how we are addressing the needs of the market in Mexico.
Sure, very interesting. I'll go next to Mukul. Mukul, the agri inputs distribution value chain in India is multi-layered, complex. How is Agrim's platform helping organize this value chain?
Sure. So, Ishan, thanks for having us here. Would love to share what we have learned so far, and would be happy if learnings are like can be taken away by the participants here. So, as you mentioned, right, the supply chain in India is very fragmented, right? The core reason behind that is the average land holding in India is pretty thin, right? So just comparing for the larger audience, right? In USA, right? The average land holding what a farmer has is close to 400 hectares, right? Vis-a-vis in India, right? That is less than a hectare, right? And India as a geography is very diversified in terms of agriculture, right? So that makes the farmer level demand very fragmented and diversified. Yeah. To cater to this demand, right, the offline world has come up with a solution, right, where the product is available. Like, the idea for a manufacturer is to make sure the product is reaching to the end farmer, right? To cater to the farmer, right, there are multiple participants, those who have come up in supply chain to ensure the supply chain is working well, right? With technology, right? So in the traditional model, right, what ends up happening is the access to the large assortment becomes really tough for a farmer, right? Second is because there are many participants in the supply chain, it leads to additional cost, landed cost for a farmer for inputs, right? The third piece is the availability of the products at the time when they need it, right? That goes for a toss because it's a seasonal, consumption is seasonal in nature, right? So when you go take a step back and try to see, right? Essentially all the problems of the supply chain can be solved through real-time visibility of the demand and plug the supply there, right? So as a platform, what we have done is we understood aggregating the farmer demand, right, and serving that demand can be very expensive in India given the geography, right? So we said building for farmer in India does not make a lot of sense financially, right? So we said, can we build a platform where we bring all these small retailers, right? So in India, just to give context, right, we have close to 130 million farmers, right, which are served by close to 1 million retailers, right, where these farmers go and procure their agri inputs, right? So the idea is, can we bring all these 1 million retailers in the country on our platform, right? And on the other side, we have all these small, medium, large manufacturers in India, and build an entire distribution and supply chain for these folks, right? So the critical aspect in the supply chain is inventory, right? And the post, right? So what we have done is, with the technology, right, we have been able to build a just-in-time platform, right? What do I mean by just in time is, so imagine when you order a food, when you order food from DoorDash, right? So DoorDash is not keeping any inventory with you, right? So what we have done is similar fashion, we do a real-time processing of the order, right? So the order comes on the platform, it goes to the seller in real time, and it gets delivered to the retailer doorstep almost in under 3-4 days time, right? So that essentially has helped build a model, right, which is non-inventory led model, right, and purely driven through data and technology, right? So that is essentially, by doing this, right, we are able to reduce the cost of the inputs for a farmer by another 7-8%, which is huge, right? When you think from a yield perspective, right, we have been able to improve their financial yield by another 20%, right? So those are the things we are doing, right? And net with this, the amount of data which gets collected helps us build a robust underwriting model for these retailers, which are completely unserved, right? From a formal financial standpoint, right? So this is what we are doing in Agrim. And the idea is so this also solves for a lot of manufacturers issue, right? Just to give one strongest metric, what we have been able to deliver, right? In the offline world, the returns for a manufacturer are close to 20% in a season, right? We have been able to bring that number down to almost 1.5%, which improves the contribution margin of a manufacturer, which in return makes the product cheaper for the farmer. So this is what we are building, and this is how we are solving for the supply chain in this.
Very interesting. No, I'm very interesting to learn how you are kind of optimizing each parts of the value chain using technology, data, and kind of building efficiencies for all stakeholders in that ecosystem. Super interesting. Pawan, if I can move on to move to you. Keen to hear from you about how Aqua Exchange is addressing the pain points of shrimp farmers in India. Are you seeing some of the similar challenges that Mukul mentioned regarding multi-layered complex value chains play out in a more kind of differentiated supply chain, I'd say?
Sure, Ishan. I mean, good evening, good morning, everyone. And Ishan, thank you so much for the opportunity to be part of the ICTforAg panel here, along with Mukul and Valentina. It's a real pleasure. Now, I'll kind of start off, I think, where Mukul has introduced the Indian farmer and Indian farming ecosystem. I would say even the aquaculture ecosystem is very similar to that, to be frank, right? However, given that aquaculture is not a very common topic for everyone, let me also give a quick background about aquaculture itself. So basically, any seafood we eat everywhere in the world, it comes from two different sources. One is the sea caught or the marine caught seafood, wherein people go in ships and trawlers and catch. The other part of the story there, the source there, is where a farmer actually digs up the land, fills it with water into tanks, and is actually cultivating kind of, let's say, seafood-based protein there. It could be fish, it could be shrimp, or any other crustacean. So that is what we define as aquaculture, where a farmer digs up the land, fills with water, and is farming these particular animals. Now, in this segment of aquaculture, especially in India, It's kind of it's been there for ages. Where I would say there are kind of farmers where right now it's a third or fourth generation activity that's going on right now. Now, given that historical, let's say, context to it, it's very essential for a lot of communities in India. It is estimated that more than 10 million people are directly or indirectly based on this particular activity, aquaculture, here in India. And India has got a fairly leading position, especially in shrimp exports in the entire world. Now, I'm trying to understand the farmer's position here. When I say I'm an aquaculture farmer, Ishan, the way it happens is I would kind of, let's see, typically take about 2 hectares of land, now split it into 2 to 3 ponds, dig up the soil, fill with water. And that's where my interactions with the outside world starts. First, I would go to a hatchery and buy seed from them. Then I'd go to a manufacturer or a retailer and get feed from them, medicines for the animal. And I, as a farmer, would tend to the animal for a good 3 to 4 month period. And after that, I would get the harvest and I need to sell this. So this what's been happening forever and for ages here. Now, looking at this process a little bit in depth, right, we understand a few challenges. The first one for a farmer that we found out during our time with the farmers is the fact that the processes on the farms itself are not standardized. That means what I do today, I'm not able to ensure that I can replicate tomorrow. And that's bringing in a lot of risk into the particular farming. It was the first challenge. The second one, of course, is lack of access to formal finance. As Valentina mentioned and Mukul mentioned, I think that's common across the entire world, that, you know, wherever we don't have much of visibility into a particular process or segment, it's tough for finance to get there directly. That's where the challenges with formal finance are obviously present in this segment too. And most important aspect of this is also, once I, as a farmer, cultivate my crop, how do I get the best price for my product? So that's where another challenge lies. And underlying all these things, the key fact is also that here in India, it's very, very fragmented market. So the basic, let's say, land holding for farm holding of farmers here average is about a hectare and a half, even aquaculture too. Whereas in the outside world, the leading aquaculture markets, it's more than 30 to 40 hectares. So compared to that, these are the challenges that the farmers face. So what we have done at Aqua Exchange is we said, okay, we need to solve for the problem of the farmer to get best price for their produce. That's one problem. The second one is we need to enable finance. However, underlying these two challenges, the key thing that we identified is, first, we need to bring sustainability into farming itself. For a farmer, he should be able to reliably say, irrespective of the outside factors, I, as a farmer, I should get certain reliability into my own farming. So to that effect, what we have done, we have used IoT technology as a tool to actually design, manufacture devices. Now we serve farmers with IoT devices. And to ensure that it fits into the needs of the farmer perfectly, we came out with a model where the farmers can lease this technology. So today, our farmers, by the way, they just pay like Netflix. You know, they pay for 6 months. It's a subscription fee. They'll get the hardware, software, everything. And it is as low as the cost of this technology today is as low as $2 per acre per month. I think it's cheaper than Netflix, to be frank, right? So that's how we are able to bring or democratize this access to technology to all the farmers. With that, the farmers are now able to freely use technology and reap the benefits. Now, the side effect of that is, by using technology, they are generating data. That brought visibility into the segment, which was erstwhile missing a lot. Now, using that data, we have enabled formal finance to really royally enter the segment and serve the farmers. Now, it's be it finance, be it insurance, those products are now available to farmers. Once these two have come in, one of the other good side effects of having data is also that the end buyer is able to now assuredly provide pricing for these farmers. That means the last aspect of the farmer's challenge, which is getting a good price for his produce, we're able to address that by getting forward contracts with the end buyers. So essentially, by tackling the key point of increasing the yields and working with the farmers directly, we are able to also solve the other two problems of financing and also getting the right price for the produce. And that's our story here with the aquaculture farmers.
Super interesting. No, thanks, Pawan, for sharing. I think very insightful and very kind of interesting view on I'd say a fast and upcoming space, right? The space of aquaculture throughout the world. So it's interesting that each of you kind of mentioned the importance of data, and we wanted to double click on use of data and technology a little bit further. If I can move to you, Valentina, how is Workor accessing data or using technology as an enabler to provide financing? You mentioned the closed loop ecosystem where you can do offtake as well as finance through intermediary partners. Could you stress a little bit on what kind of data you have on the farmers? How are you able to underwrite and how you leverage data and technology?
Yes, sure. So I'm gonna give a brief introduction to how we actually serve these unbanked farmers, no, and why before for traditional financial institutions it has been so complicated. So our main value that of our product is actually the underwriting process that we developed, and it completely based on tech tools and digitizing that data. So what happens is that first, technology helps us to completely automate the process of analysis, and currently we can approve credit within 48 hours because of all the tech automations of the back office we have and the underwriting models that allow us to process very fast the applications that we receive. Now, what we actually analyze to evaluate the real paying capacity of the farmer. So our underwriting process relies on historical data of the farm and the historical data of the producer, of the farmer. So we not only unlike the traditional banking institutions, we do not take just the formal incomes that farmers has, but we have more than 50 different indicators that sum up into an alternative credit score, and allows us to finance more than 90% of all the financial needs that farmers have. So what we do is that to receive data from the buyer of the farmer, like off-taker, we receive data from the suppliers of the farmer, like retailers, and also we use the satellite images to actually evaluate the productivity index of the farm. We also take into account price fluctuations, produce price fluctuations of the market, and of course yields of the farmer, historical yields. So something important is that sometimes we can see that farmer has a lot of costs fiscally and very low incomes due to the certain strategies they use for tax for avoiding paying so much in taxes. So that's what we're actually solving. How to see all this information that exists in the industry. The data is created with every transaction that happens in agribusiness, but it happens usually in cash. So how to see all this information and analyze it and actually evaluate if the business of the farmer is profitable or not, and the amount that we can approve the credit. So certainly here we are based on the tools that help us to digitize all this data, to analyze it and process it fast. So in the end, it's an inclusive credit, affordable credit, and a fast credit that is like super important for the industry. So from one side, we gather all this information to approve the credit, and also we provide a follow-up during the productive cycle of the farmer. So with the satellite images, we can give follow-up to the farmer, to his productive cycle, and identify any potential risks. So basically, the technology allowed us to create an affordable and inclusive product that is adequate for even small farmers, the smallest farmers in Mexico. And the tech tools allowed us to actually bring financing to the sector because there is a lot of capital that that is in the banks or in different and government institutions that they want to devote it to the agri sector, but they just can't deploy it because they don't know how to understand and analyze the situation of the farmer without these formal data sources. And I think it's also important to imagine a bit the reality of the farmers. So us, maybe living in cities, we usually go to a bank and we ask for the credit card or a mortgage, and we just see it like a normal process of the daily life. But if you think about rural areas in Mexico, and I think it's similar to India, like there are villages of as small as like 3,000 people. So basically what the farmers have is just one ATM in the village, and they don't even have a sucursal of bank or so they have to drive around 2-3 hours to bring all the papers, if there is something missing, to come back and go again and again. So of course also the way the farmers access the credit through the platform, it lowers a lot the costs of the farmers, and any farmer, even in the most remote area in Mexico, can access the credit of Vercor, and the product we have actually applies to any credit to any crop or region in Mexico. So that's how like tech and data allow us to develop this product that actually solves the pain points of the farmers in their daily life.
Interesting. Super interesting. No, I think it's fascinating how you are using different data points, triangulating and kind of creating your own underwriting algorithms to create financial access. Mukul, if I kind of connect this to the points you make earlier, right, around data, just in time delivery of goods. I mean, knowing how challenging logistics, matching inventories at different locations is in the context of the Indian market. How are you leveraging data and technology to really ensure this JIT and very efficient business model that you are developing? And also, if you can touch upon how you are accessing data for underwriting of customers on your platform for enabling credit access.
Sure. So let's understand very quickly, right? Why do we need to do a credit product in this industry, right? First. So essentially, when we look at the offline world or the world that exists without a grid, right? There are three potential ways of creating a working capital loan in the ecosystem, right? One is either it is a PSU or a national bank, right? Or it's through NBFCs or the formal lenders in the country, or through the supply chain participants, right? In India, bank penetration in these, like, where these retailers are, right? The banking penetration is less than 25%. So that makes most of these guys, right, majority of these guys, physically not being there in the proximity, right? So that is one. Second is the NBFCs or the other lenders, right? They don't have mechanism to lend to these guys, as Welchia pointed out, right? There's a lot of money to deploy, but don't know how to deploy, right? The third piece is the supply chain financing, right? The traditional players in other value chains like FMCG, pharma, and all these other, like, other major retail distributions in India, right? The frequency of purchase is very high with the same wholesaler or a distributor, right? When you have multiple orders in a year, right, where you are transacting with a wholesaler or a distributor nine months in 12 months, right? They have this ability to understand you as a consumer or as a retailer, and they can start lending you unsecured loan, right? In our industry, that frequency is not there, just because the supply chain for every category is broken. So what it means is, for a retailer, he has to go to a different wholesaler or a distributor for seeds, which is 2 times purchase in a year, right? He has to go to a different wholesaler or a distributor when he wants to buy crop nutrition, so on and so forth, right? So this retailer does not have the capability to buy everything from a single place, just because how the supply chain is designed, right? With the technology, right, we have been able to bring all these categories on the same platform. So eventually what it means is, this retailer can do all these categories transaction on a single platform, which gives a strong frequency use case, right? Now, what the data which was not available earlier, right? Now I'm able to see the behavior of the retailer throughout the season of the crop, right? I'm like, that gives a stronger data point in terms of how many farmer this retailer is serving, right? What is the throughput of the shop, right? And we triangulate that with a lot of other public database which are available in the country, right? Like GST filing database, so on and so forth, right? So with that, right, with all these data points, we have been able to figure out the business profile of this retailer, right? And what is the risk in collection, if there is any, right? So just to give you an example, right? If the monsoon in a particular area hasn't done good, right, in India, then there is a higher chances of default on a particular crop. So you don't lend for those crops, right? So that is the visibility we have been able to create through data, right? Now, when this data is available to these NBFCs and banks, right, they can say, okay, now I understand this customer, I can underwrite better, right? So this in return, right, creates a strong value proposition for a retailer, right? Now, the product which we have been able to come up with is a 30 days product, right? Where it's essentially not financing the entire crop life cycle, right? But it is giving, so the rotation in a shop, right? In a retail shop happens within 30 days, right? What it means is he can stock better, sell the right product to the farmer, right? And which in return, right, helps the farmer overall, right? And the pricing, right? 30% of the users, right, are still able to get some level of financing in the offline world, right? One is the access to credit, and another is the cost of credit, right? So because we understand these guys better through data, right? That has helped us reduce the cost. So typically in the offline world, the cost of funds is close to 6-7% monthly, right? For these retailers in India, right? We have been able to bring it down to 3.5%. So that is effectively half the cost of credit, right? So this is how, like, the ecosystem has been built out.
Very interesting. No, I mean, as you kind of described this, even at Venture Lab, we believe that B2B platforms create proprietary data, right? All of these data points don't exist in the offline world. And so you have proprietary data, you have access to relationships, you have more insights on the customer you're serving. And it's interesting to see how you are leveraging it to enable credit and also at kind of much more affordable, much more reasonable rates. Super exciting. Pawan,
I remember
yeah.
I remember you meeting few retailers back then, right? So
Yeah.
those guys were super happy, right? When, like, they never thought, like, this type of thing. Like, my dad, just to give one anecdote for the larger audience, right? My dad has been running agri inputs business in the country from last 30-35 years, right? And he says, you have credit available for everything, but why don't you have credit for agriculture, right? So I guess that is, and this being the most crucial sector in the country, right? From a number of people involved in this economy, right? So this is, like, just to give you, like, for the larger audience, right? A retailer cannot take a loan without a collateral in India, right? They have to put a collateral which is 150% to 200%, right, of the loan what they are asking for. And that is true for the most developed state in India, right? So this is like, this is more like a problem which is there from the ages, right? Nobody addressed it, and people are still living the old way, right? Where we get we get food on like under 10-15 minutes on our plate, right? Through these technologies, what have come, internet technologies, right? But it is not solving for the deepest root issues in the country, right? So I guess, like, it's the high time for entrepreneurs like us, like, to take that charge and build for the deep rural India. So I like, I keep getting excited with just the sheer depth of the problem we are like trying to solve here.
Yeah, no, I mean, absolutely. It's an exciting time for agri-tech, right? The agri-tech boom is only starting, and it's exciting to see people as talented as yourselves building something for the space and trying to also show that this is scalable, this is financially viable, and this is also profitable. So I think that's super exciting. Pawan, if I can quickly move on to you, uh, uh, I know you have farm level data through the devices that you spoke about in your earlier response. How are you leveraging that? What's the role of credit on the platform that you're building?
Sure, Ishan. So I think I would echo the words of Valentina and Mukul very much here. See, first of all, taking a step back, if we look at this particular sector and financing, right? I mean, if we look at the overall evolution of financing itself, we see the trend from macro to micro. When I say that, see, earlier, like my father was a banker and a regional rural bank. That means a bank which is dedicated to be giving loans to only farmers. And this was done since was 40-45 years. He's been a banker. So as a child also, when I used to see all the kind of way things used to function, in those days, by the way, in 80s and 90s, it was only where sectors were identified. A particular crop was identified. There was no micro level data or micro level monitoring of things. It was a sectoral thing, a very top level thing, where I would say, oh, I'll give a loan to a rice farmer or a wheat farmer, but may not be for others. So a farmer doing anything else would be out of the purview, right? So that was the traditional view of things. In fact, that's not just 40-50 years ago. Even very recently during COVID also, by the way, here we have seen, especially in India, the banks have put an unofficial embargo on sectors like hospitality, education, like that. So typically that's the go-to thing at a macro level where you see things, right? Now from that, the only way we can bring, let's say, formal finance to any new sector is by getting better visibility into that for all the, let's say, ecosystem players, be it banks, be it insurance companies, etc. And for that, so first of all, when we were looking at this particular problem, the solution for us was very visible, right? We need visibility. It was very clear for us. We need visibility and very clear insights into the activity on the farm. Now, how do you do that? I can't go and ask a farmer, right? Today, if, let's say, if I ask somebody like, how did you spend your money? Obviously, they'll not give me the data, right? So the easiest way is put a credit card into his hand. And a tool which to the person, it is actually helping him, right? It's helping him with convenience instead of carrying cash. But at the same time, it's giving me the sufficient data. Same thing with something like a Google Maps. If I ask you, Ishan, where you are, you might not answer me. You would tell me, why do you want that information? But if I put a useful tool like a Google Maps in your hand, in your phone, I'm getting my data and it's also serving you. So it's a sustainable way of sourcing data. So we followed a similar approach, Ishan, to aquaculture also. So as I mentioned, we created tools that are directly useful to farmers on a day-to-day basis. When I say that, let me give you a couple of examples here. So as an aquaculture farmer today, I would use these devices called aerators, which are nothing but these devices are infusing oxygen into the water, which is what the shrimps take and they live. Now, this is so sensitive that this runs for 16 hours every day. And even for 1 hour, even at the middle of the night, if 1 hour, if these devices don't run, all the shrimp will die. That means we are saying that within 1 hour, a farmer tends to lose multi-million rupees in just 1 hour. That's how sensitive these operations are. So what we have done now, we gave a tool to him, which is what I mentioned for $2 per acre per month. That tool is now monitoring those devices and alerting the farmers. So our farmers now happily sleep at their houses right now, which is erstwhile they used to sleep actually in their farms to avoid these catastrophes. Now they happily sleep at their home, and our device monitors all the aerators And if at all, even one of them goes offline, the farmer gets a phone call, he's woken up, and he's alerted to a potential disaster. Given that that's a kind of solving such a direct problem, farmers are happy to use it. Now, with this, when this device is running, parallelly, I'm also getting visibility into the activity of the farm, right? Because this device is essential for the running of the farm. So through that, as a proxy, I'm getting data regarding the farm activity. And that's all real time, by the way. And it's all machine-driven data. So it's accurate, it's sustainable, it's scalable. Now, with this data, now when we went to the banks, now the banks were more than happy because, as Valentina mentioned, there is huge governmental push to the banks to serve these sectors. However, erstwhile or before this current scenario, they did not have a way to really peep into this particular segments. Now, once like people like Mukul, Valentina, and myself, we are going to the banks with this data. Now the banks are more than happy to look into this. And I'm happy to say that within a couple of months, at least 2 banks have come forward, including the largest bank in India, State Bank of India, and they're now offering loans directly. And when I say loans, by the way, the key point, again, as Mukul mentioned, it's a collateral part, right? Earlier, any loan had to go with, let's say, collateral, which was urban collateral, which was easily liquidated, etc. Right? Now, all those things are done away with. A farmer, if he is a good farmer, if he can do the crop well, he's now getting a loan purely based on the as collateral, the crop as a collateral, right? And that's the power of data, Ishan. I think that's where we are able to change the way farming is done. And just to give you a quick anecdote here, farmers earlier were getting credit at about 40-45% on an annualized basis. And that is now come down to 18% right now, right? So what does it do? Effectively, it is bringing down the cost of production for farmers. So one, we are increasing reliability, right, through devices. Through the data and through the finance, we are able to bring down the cost of production. The entire ecosystem is becoming more sustainable. The farmers are able to do it more happily, reliably, and at low cost. That's the impact that data and through data, the financial services could bring to the farmers here.
Thanks, Pawan. Truly fascinating. I request audience to our participants to leave questions in their chat boxes, and as and when there are some questions, I can pose it to the panelists. But in the meantime, we'll continue conversation because I just have like a few more questions which I would love to ask them. Now, the notion from the outside is that farmers, agri-retailers are used to a certain system which is, say, 200, 300, or even kind of hundreds of years old, right? And the notion is that onboarding customers, building trust with the customers is the big challenge in the agri space. What has worked in the context of your businesses or in the context of the strategies that you've used to onboard and acquire customers, right? If I can start with Valentina, and if you can throw some light on how customer acquisition and trust building works for in Workhorse model.
Yeah, as you mentioned correctly, one of the main challenges that introducing products of mainly financial services for the base of pyramid, in this case for small farmers, the main barrier is the trust, right? So farmers have few experience interacting with traditional financial institutions, and what they do, they go to informal lenders, and often they're taking advantage of, right, with the very high rates, with the contracts with small letters, so or even no contracts at all. So they're super careful choosing with whom to work, and the whom they trust is their community, right? So if one farmer said that something worked for them, that's nothing more valuable. There is no more valuable feedback for the farmer. So how are we overcoming this obstacle is that we're actually partnering with the industry players, in this case with retailer shops of agro supplies. So what are those shops? They're like really small businesses. Sometimes they're even partially informal, and they're located in every small village in Mexico because, well, as we know, main activity of rural population is agriculture in Mexico. So in every small village you will see a shop of grocery, like a small shop of groceries, and the agri supply shop, absolutely in every village. So what we do is to offer this. When farmers do not have access to credit, they actually go to the shops and in an informal way they ask like a credit, which is usually around 45 days. So farmer needs fertilizer in the moment, but he still doesn't know how he gonna pay it. So he's like, okay, give me this 45 or 60 days. And meanwhile, he usually searches for some informal option for financing. So for retailers, it's a big challenge because they need to sell and they run a lot of risk giving this kind of financing to their clients, right? So we offer them this value of selling actually more and guaranteeing the payment at the moment. So how we do it? So we partner with the shops and we convert them into our point of sale by putting there a certain like a tablet with our platform or a booth that also has a tablet and explains our service. So anytime the client enters the shop, which is though very targeted, right? So who would enter the shops? Only farmers would enter the shop. So it's like very targeted marketing at the point of sale. And so the owner of the shop, the seller, offers to get acquainted with our product through this digital tool that we leave, like a tablet or a QR that they can scan and research about our products. Also, retailers have a certain dashboard in their computer so that they can actually show the farmer how the platform works and what is it. And this way we build the trust in the community. So we do not break the connections that already exist in the industry. Like we do not come and want to revolutionize everything that's been there for years, but we actually add value to each player and start digitizing their flows of goods and of money, benefiting retailers and benefiting farmers. So we become the financial tool for the retailers, and eventually they convert into participants of the word of mouth marketing because the word spreads very fast in the community, and they become like certain influencers and spreading information about the Vercor. Eventually, of course, it leads to a low CAC, a low cost of acquisition, because we do not go in search client per client, and we also do not drain money in the digital marketing campaigns that often happens. And I think here our main lesson, adding a bit to what Mukul and Pavan have mentioned, the main lesson is you actually need to understand the industry to align, to partner with the players of the traditional industries, to listen to them, because let's say what it serves to launch digital campaigns to attract farmers if they will never trust this product, or what it serves, let's say, to for granting a credit, take a collateral, as Mukul said, that equals of 200% of the amount of credit. You have to actually understand what matters to the farmer, whom they listen, what is important for them in their daily life. And that's what we saw, that in both for the underwriting process is very important, these connections in the community that farmers have, and also for the client acquisition, it is important how you build this trust with community influencers, the industry players, so that they already can introduce you to the farmers. So that was the way we had in Vercor.
Super interesting. Before we move on to the other panelists with the questions on trust and customer acquisition, I have a question here directed to Pawan from Rachel, and other panelists, please feel free to chime in because I think it's relevant for each of your contexts. The question is on data privacy and security. Have you thought that your efforts may be compromising farmers' data privacy in the future? In other words, the data you are collecting could be exploited when objectives change in the future, such as banks and public institutions and governments accessing the same data and using it to disenfranchise farmers, what are the measures you are putting in place to control for such future risks?
Right. Thank you, Rachel, for the question, and very, very apt. Of course, the moment we started to capture this data, the first thing we realized is that we have a huge responsibility in our hands today, right? I mean, this data could make or break things in many ways. So, 2 to 3 measures that we put in place to ensure that no negative things happen to the farmer. The first one is from a technological perspective, where the entire processes are GDPR certified, which is global data privacy rights standards given by the European Union. So we our processes, our systems, the way we store data, everything is GDPR certified. That essentially means that even at a technological level, like even the data in the hard disk are also encrypted. Like nobody can see, including Google, right? So that's the kind of level of data privacy that's ensured. The second one, at a process level also, anywhere if this data is being shared, even with Aqua Exchange or within the Aqua Exchange ecosystem or outside, it is with the consent of the farmers. It is expressly told to them. It will be showcased to them how this data will be acted upon. And it also has a time limit where the farmer can also again choose to stop it also very easily. So all these are inbuilt into that particular privacy rights framework. And that is how we are working on it. That's one. Second, when we share the data with the farm partners also, this data never goes into any farmer partner, let's say, systems. It always stays with Aqua Exchange within the purview of this GDPR, let's say, framework. And that is how we ensure that farmers' data privacy is ensured, first thing. And farmers are aware of the consequences, even if you're sharing something with their consent.
Interesting, super interesting. No, I think thanks for the response. I think very, very apt question. Any of you would like to chime in on this question or any kind of additional insights there? Sure. If I can go back on the questions that we were addressing, Mukul, I know your model does not have a lot of feet on the street, and still you are addressing farmers in remote markets, remote geographies in the country. What has worked for you? How are you able to do that so far?
Okay, so again, nothing super smart with that we are doing, right? It's just that the way India has evolved over the course of last 7-8 years, right? So with the data becoming very cheap, right, in terms of the accessibility, right? Now, today the mobile network is there, right, in the remotest part of the country, right? And in 2016-17, right, we saw the data prices dropping drastically, right, in India. So first, majority of the people, right, used to go to internet for entertainment, right? But when the data became very cheap, the accessibility became very much, right, right there on the phone, right? So that led to, like, and in India, right, the smart thing is most of the small business retailers, right, farmers are very enterprising in nature, right? So they are always on the lookout that is there anything which can help them do their business better, right? So I guess these are the two things, right, which are inherently there in our target audience, right? So they have access to internet at a very low cost, and they are very enterprising in nature, right? So with this understanding, what we also understood, right, is like, for the larger audience, right, in India, people by default don't trust businesses, right? If you are giving a better service, if you are trying to solve for their problem, the first question a consumer will have in India is, there is something hidden here, right? There is something which, I mean, like, which these guys are not telling me, and they will make a fool out of me. So this is because that is how a typical small or like, middle class Indian would think, right? When they do business with you, right? So by default, you start with a trust deficit, right? So I guess this is at a psychology level, this is the audience which you are talking about, right? They are open to internet, right? Where they want to use some services, right? They are very enterprising in nature, yet it's very difficult to build trust with them. So I guess this is the persona we are talking about, right? Now, how do we do that, right? So in India, right, the trust is built through social fabric, right? So, so the way it works is, if I see three people working with someone, right, with some, like, they are buying from a business, right? The fourth guy will immediately start using that platform without even thinking about the social validation is far more important than somebody coming to you and selling you, right? So on this, these were the key persona thing, right, in front of us, right? So how did we go about solving this? Is first is always stay relevant, right? Most often than not, right? Most of the marketing are over promise, under deliver, right? So what we did was, we said, if we send people uh, to their shop to acquire those guys, right? It's a very, very expensive affair, right? So we build the entire digital experience of building trust, right? So just to give you an example, right? We identified these are the retailers, those who sell agri inputs in this area, and these are the products which they would be selling in this, right? So basis that, we did a performance marketing. Once they showed interest on Agram, right, that is when we had somebody to speak to them and tell them that there are 4 shops near you who are buying from Agram. And once that social validation became, right, that is how the customer, initially it was very difficult. Our acquisition cost, or the funnel conversion was very weak initial days. But as we had more number of retailers on our platform, the next, 0 to 10, it was difficult. 10 to 100, it was equally difficult. 100 to 1000, it was equally difficult. So exponentially, the trust building exercise effort, right, reduced exponentially as we had more number of retailers. So it's purely when you understand your audience in the rightest fashion, right, then delivering the right thing, promising the right thing, and staying up to the mark, right? So I guess this has been the gist of what we are doing right now with this, right? Just to share how this strategy has translated, right? Just to give numbers for everyone, right? One retailer in India sells agri input worth $100,000 in an year, right? Our acquisition cost of one transacting retailer has been less than $15 lifetime. So that is just a peanut to acquire that large account, right? So that shows this model has worked out really well, and this model has worked out for at least 20 states in India. So we have close to 28 states in India, right? Out of which 20 states, this model has worked out really well across. So I guess the idea is typically the issue, right? I guess I can talk about the issue is basically when we have digital marketing, right? We tend to think, okay, showing one impression, right, cost you hardly less than a cent, right? So you keep showing those advertisement to the customer, right? And one fine day, customer will click on that link, and then you will get a customer. That's not how you should think about it, right? The idea is, even if I'm showing the ad once, right, is it relevant for the customer, right? Am I promising the thing which I'm going to deliver, right? So I guess if you start questioning every time you want customer to pay attention to you, if you are promising the right thing, I guess that is the most important thing.
Super interesting. Super interesting. Thanks, Mukul, for sharing. We are out of time. Unfortunately, this conversation could have gone on for much longer because there's just so much insights and so much to learn from all of you. Thank you for joining. I think we have learned a lot. Super excited to see where your organizations go and how you are able to disrupt the agri space and solve for access for a lot of farmers and agri retailers. Thanks everyone for joining, and I hope this was helpful for everyone.
Thanks, everyone. Have a great day.
Thanks, everyone.
Thanks a lot.
Okay, bye-bye.
Thank you. Bye-bye.